Good morning all, hope you're doing well. We've got CPI today, so we've got a lot of uncertainty and general uncertainty for the week because, we were risk on at our risk calculation, but things fell. Yields fell, but then the dollar rose, right? So that didn't really make much sense. So there was a discrepancy there with the US yields and the Dixie, and the risk calculation was out of bonk with what we actually saw. So it's just general uncertainty this week, and we want to get the CPI out of the way, and then we can maybe have a clearer picture because it's supposed to come in softer than expected, and it should cause the dollar to weaken. So what we're currently seeing, we're seeing liquidity grabs on some dollar pairs. New Zealand dollar USD rated stops below. The Australian dollar USD did the same. The Euro USD and the Pound USD all took stops, the SLCs below. I show you AU. We want to see the size. That's the thing, okay? So it's 561 before. Huge amount of liquidity here that they want to get, the sharks. And it's possible that they want to get all these stops in order to bounce. So what you want to see the size, 561. And you want to see that size get a lot smaller if you want to see a bounce. If it gets larger and further below, then the price is going to come down, and it's going to do like a price discovery, and it's going to keep coming down to take these stops out, and then we can bounce. So it looks like we might want to come down to 63.50, which is 42 pips away. It's not that far. Grab all that liquidity and then we can bounce. So what we're probably seeing is like a liquidity smash and grab before the CPI because they're anticipating a weaker dollar. So they're having a strong dollar currently in order to set up for a weak dollar at the CPI print. Okay, so it's basically punishing the retail guys in their positions. It doesn't matter if they're long or short; they're going to get punished because they're slightly out of sync with what's going on. So we should anticipate what's going to happen in the future, and what's going to happen currently is going to possibly be the reverse. What's going to happen? So if we're going to have a soft dollar in the US session, we could see a strong dollar in the London session in order to come up, in order to sell, or go down in order to buy. So it's very tricky, very horrible, and fairly stressful, to be honest with you. So this is my last bulletin for the week, and I'm going to be back on Tuesday. So what you need to do is try and trade what you see. Perhaps don't think what you think is going to happen, because no one knows what's going to happen at the CPI event. No one knows. It's possibly fundamentally it should be setting up for a softer USD, but it might just do the opposite. So we have to be really careful. The yields fell, but the dollar went up yesterday, so it's very difficult, very tricky. So this is out of bonks. This is risk off. We see very much of an inversion. The 3 month is more than the 10-year. Okay, so that's quite scary. So that might be causing the dollar to strengthen. We've got a risk off there. Thursday we are looking at they sold the Euro USD. But look at the Euro USD, it's fallen. So, go figure, be really careful. It's just probably retail punishment, I think, and payday, potentially. Let's have a look at the Euro USD, actually. So I think what it needs to do is grab that liquidity, and then we're going to bounce. So it's probably going to have a huge wick. There's your monthly pivot for AU, okay? Let's look at EU. And so the stops there, but these stops are all going all the way down, but they're not really massive like the AU. So they're at parity, basically. Parity stops. There's one there at 99.60, so we might come down and get that. See how it's just sticking out a little bit, so it might want to come down and get that one. Take all these stops out, and then we're going to bounce. For the CPI, so it's really horrible. So that's the logic there. So we come down in order to buy because it needs to try and think about what's going to happen at the CPI, but we don't know what's going to happen in the future. That's the trouble. It's just a big gamble. but at least you've got your targets, okay? So, if you were up here and you want to think, well, Euro USD should be coming down fundamentally, technically it could be coming down, at least you've got your targets and you get out where they get out at parity. So, yeah, it's very tricky. So I need a long weekend, and hopefully next week isn't going to be so roller coaster. I think because we had like recessionary fears and all this stuff, this risk off stuff going on in the world, and it was just causing a lot of uncertainty as well. I mean, look at this on the USD, strong on the 3 month, 6 month, 1 year, but it looks like it's weakening on the small time frames. So is this the turning point on the USD? You could argue technically yes, and what we're seeing today is just stop loss cluster rates, right? It could be just that. It could just be liquidity probe and then bounce. So yeah, be careful. The dollar Swiss is the weakest and the Euro USD is the strongest since last Thursday. So it probably is just a stop hunt today, possibly. So there's no trade of the days with CPI. And to be honest, it's good we don't have any trade of the day today. For my stress levels, I don't need extra stress, to be honest, because it's quite stressful trading anyway. And if you're doing a signal that doesn't go particularly well, that's extra stress. And you don't really want that stress in your life, really. So maybe next week it'll be a bit clearer. And another thing is that the bubbles are very accurate, but recently they've been a little bit out of bonk because of that uncertainty here. And the fact that we're probably wanting to get stops out below, like I just showed you, in order to bounce. So it's basically just paying the retail guys and then punishing them, and then paying them and punishing them. It's really horrible. It's like a big wash machine. So, really, pound Kiwi should have done well because we went risk off, okay? But we were down 120 pips. So that's out of bonk, right? Because the pound Kiwi is sensitive to risk off or risk on, but yet we fell while we went risk off, right? So it doesn't make any sense. So you've got to be really careful, and potentially what you need to do is really reduce your size and potentially have like a little bit of a wider stop, and you're not going to get stopped out so much. But the danger is that you inevitably might get stopped out because of liquidity probe. It might want to come down, take all this liquidity here. There's your monthly pivot, so you want to be looking to buy dips as long as we're above the monthly pivot, okay? It might just want to come down and get these stops. It's horrible, really. Patreon, Telegram, Discord. So this is the thing of the S&P. Technically, we've got resistance and we are a sell at the high level. See how we've gone, they went long and so we fell, right? So that's something to bear in mind. We are a sell there. So the dollar could probably strengthen from that reason. And so they went long. I said they would. There, can you see? They went long. Here, that's square. And down we came, and they might sell here, which we don't know. They might do. So I think there's going to have a very bumpy London session today, I think. They went long, and they might sell, potentially. There's not much movement on these hourly candles over Asia. So let's wait and see, I guess. And DAX, so it could be a risky sell because they're going long, but if we don't know what they're going to do. So you do want to get a copy of this trading station. It is working now. It wasn't working at the beginning of the week, and it is working now. Gold, well, they're selling it again. So they sold it here. And they might sell it again, which would be really scary and horrific, really, if you're short. This is why the dynamic's more powerful than the static. See, the flow of time. It doesn't matter where they are on their ratio, what they're doing over time is more powerful. Okay. So that got raided, and that EU got raided, GU, NU, and we're probably going to see some cross yen get raided as well. This was really horrible. Largest move was the dollar CAD, 13% shift, and NU shifted for 11%. So you could argue, yeah, fair enough, that can come down because the sentiment potentially they've gone along by 11% on NU. Friendly rate's quite good. We probably want yen and dollar to improve a little bit, but that's a good score. They're getting punished, which would be normal, and a bit of patience. But yeah, we had a 120 pip loss. The fundamental logic of this to go for this to fall, it didn't pan out. We had a risk off day, and this is a risk off signal, and we had a loss. So that goes to show the fundamental logic was flawed, and the sentimental logic let us down. So we've got to be careful with this. I think that's probably the problem. Pound is just very uncertain as well. So yeah, the UK economy isn't in a great shape, so there's a lot of uncertainty there. So that's fine. We'll have a weekly loss because we're not having a trading day tomorrow. That's fine, no worries. But we want this whipsaw and chop out. We don't want to be trading this chop. It's really horrible, especially as the things are getting liquidated as well. These stops, and that's that. That's where we stand. So AU is a sell on the bubbles. So we've got those stops below. EU is a sell on the bubbles, and NU as well. So the bubbles are working out. I suppose that's one positive thing. So that's that. Economic calendar, CPI. God knows what's going to happen there. Probably, if we get worse, if it becomes lower than 8%, then expect the dollar to weaken. However, if everyone thinks that, the reverse might happen. Okay, so there's so much. There's a bit of a gamble, really. Be careful with the dollar, and especially as we're in a crossroads as well. Here, we're at the technical crossroads. Where are we? Here. So very tricky. So I wish you a good day, and be careful as well, and keep calm, always very safely. And I'll speak to you guys on Tuesday, and we'll have the COT data then. It will be slightly delayed, but it won't be a problem anyway. So remember, the Euro FX COT data was strong. Okay, so how long that will last, whether or not it will reverse from Friday, we'll have to wait and see. So I'll speak to you guys soon, and remember to be careful. Maybe just sit on your hands today and just monitor.